Hey everybody, welcome to Mortgage Today for Thursday, November 16, 2023, and oh, what a day it was. UMBS were up 14 basis points on the day. Not huge, but at least it was in the green early in the morning. Bonds were already slightly stronger in the overnight session, with most of the gains arriving with Tokyo's opening hours. This wasn't stunning considering the base case scenario for sideways momentum between now and early December. There's been a little bit more improvement after the 8:30 economic data, with jobless claims being the most likely culprit, though a drop in the Philly Fed prices could be helping. So jobless claims came in at 231,000 on a 220 forecast. It was 218,000 previously, so maybe the Fed's work is starting to kick in. Continuing claims came at 1.865 million on 1.847 million forecast. It was 1.833 million previously. We also got the Philly Fed index, came in at negative 5.9 on a negative 9 forecast, but the prices paid came in at 14.8 on a 23.1 previous. And import prices came in down 0.8% month over month versus a 0.3 forecast. It was 0.4 previously. It's down 0.2% total year over year. Wednesday's moderate selling in the bond market makes for a tougher lock float decisions in the next couple of days, especially in light of the fact that the calendar is very light on likely market movers between now and the first full week of December. 10-year yields have come down in the 4.55 range, could prove to be close to the central tendency of a range that is a bit narrower than we're used to. Being closer to recent lows would argue for an increased lock bias. In general, being closer to the recent highs, 4.66, for example, on the 10-year, allows for more subjective decisions provided or weren't losing ground due to objective data, news, or events. Industrial production also fell 0.6% in October, according to the Federal Reserve. Manufacturing production fell 0.7%. Capacity utilization fell to 78.9%, which is well below the long-term average. This confirms the readings we have been getting out of the ISM surveys. Manufacturing is struggling. Hot on the heels of cautious guidance out of Home Depot and Target, Wal-Mart sounds the alarm on consumer spending. The CFO said in an interview with CNBC, Wal-Mart has been leaning heavily into promotions, which should be taken to mean cutting prices to move merchandise. So maybe people are going to stop spending so much money all the time, or they're just spending it at fancier places than Walmart, and that's not going to help inflation. Homebuilder sentiment fell in November as rising interest rates dampened affordability. These home builders are still doing way better than everybody else in the real estate sector. They're not losing thousands of dollars per unit like mortgage people. They're not being sued into oblivion like real estate people. So maybe they just need to man up a little bit. Wednesday's bond market losses reigned on Tuesday's post-CPI parade. Justification was adequate, with retail sales coming in 0.2 higher than expected, but the implications for the near future were uncertain. Were bonds only reacting to the data, or was CPI rally overdone to some small extent? Today's session helped answer those questions. All it took was a modest miss in jobless claims and a few other second-tier reports for bonds to fully erase Wednesday's losses. So at the end of the day, the UMBS 6.5 was up 33 basis points at 101.23. Ginnie Mae's were up about the same. So ending at 101.23, that's putting us just above this black Fibonacci line, which has the 100-day moving average as support. And then the ceiling is up at 101.633, which is another Fibonacci that has the 200-day moving average coming down to it. So like we said in the commentary, is hopefully we'll start trading within a narrower range so that I can stop pulling my hair out. We also got a post from my sponsor at thatmakesense.com. Come check it out. This is another of a video series on The Slight Edge. So you don't actually have to read anything, but you can learn some great stuff, because The Slight Edge is an amazing book for whatever you want your goals to be, to help you get the mindset, strategy, and the step-by-step progress towards making it happen. Check that out at www.thatmakesense.com.